All right, Russ, I wasn't present for this roundtable. I hate that I missed it. Catch me up. What did I miss?
Well, today's podcast is about I have an active income problem. And to be honest, Joey, I feel like I got an active spending problem that I need to talk about with you.
Oh,
Like
gosh.
this is like a coaching moment.
Do you really want to go there, Russ? We can't afford to be derailed. Like, let's stick to what's the active income problem? Taxes are killing me. Please just stay on point. Just this one.
Can you give me a private coaching session later? I'm going to need some help here.
I'll put it in my calendar.
I'm looking at my summer, and by the way, I'm going to be missing a lot of these too because I'm going to be traveling a bunch this summer. There's a lot of fun destinations in the summer plans, and yeah, I'm going to need some active income, passive income, and everything else to help pay for all those expenses. All right. So you want the Cliff Note versions of what we talked about?
Hit me up.
All right. Well, one, I have an active income problem that to some people may initially go, oh, well, like I don't make enough money. No, that's not what the podcast is about. It's actually regarding taxes. An active income problem, meaning that when we're looking at the cash flow quadrant, right, you've got the E quadrant, the S quadrant, those I would say are active income, right? You're actively having to work to trade time for money. As we say, the E's trade time for money. The S's trade lots of time for money. Right?
Exactly.
So when you think about it like that, so if you are highly paid, whether you're a professional or work for someone else, you are trying to find ways to reduce your taxable income, and it's really hard when you're on the left side. So this podcast talks about different strategies that we've observed and watched and are doing personally to help us reduce our active income.
Oh, perfect. Yeah, I know people in our passive income mastermind have been sharing questions about this. So I'm hoping to get a lot out of this episode. And I'm sure you are too as you're listening. Russ, let's not hold any more back. Let's just get straight up to the table and let's belly up.
Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome into the Financial Freedom Roundtable, where each week we break down complex financial topics so that you can more easily understand them and, more importantly, take action on your path to becoming financially free. If this is your first time joining us, welcome. Grateful to have you in the room. I'm Russ Morgan. They call me the idea guy, mostly because lack of follow-through guy didn't sound so cool to me. But enough about me. Let me introduce you to the best coaches in the nation. To my left, the man I like to refer to as the true financial Sherlock Holmes of our day. No problem too difficult to solve. If I would have only known him earlier, I would have been so much richer, says everybody. Mr. Downtown Ernie Brown, say hello, Ern.
Hello. Man, what an opportunity. What an important conversation today.
So, Ern, the question is today, or the statement is, I have an active income problem, right? Taxes are killing me. What should I do?
Yeah. Who isn't saying this?
Well, I think there's some, right? There's some out there that are like, what are you talking about? I pay zero in taxes. Now, there's two groups of those people. There's ones that live on the side of the road in tent cities. And there's others who live in amazing, sprawling penthouses overlooking some of the finest cities in the world.
Yes, there's those who live because of taxes, and then there's those who truly pay no taxes.
Right. So we need to figure out what that looks like. But before I want you to dive into that, let me get around to the retiree of the group, the guy who, a lot of times retirees are living off taxes. They're living because of taxes, Social Security. But Mark has not reached that age, even though he's reached the ability not to have to go to work unless he wants to. Mr. Catch Me If You Can, when he's not killing bears with his bare hands or spear diving for tuna. He's right here dropping gold nuggets, the one and only Mark Haraguchi. Welcome, Mark.
Good day, everybody. Oh, this is so poignant right now. I mean, obviously tax season is wrapping up, or if you're like me, you filed an extension. And hopefully you're not like me, because I wrote the single largest check to the IRS because I just got throttled last year for this exact thing. Active income problem, taxes killing me. It's time to get strategic and employ some good foundation to legally maneuver out of that that just slaughterhouse that I got put in.
Shame on you, man. Shame on you for getting slaughtered, right? Like, I mean,
Exactly.
I love the statement when some of the most wealthy people in the world are asked the question, why do you pay so little in taxes? And their response is, because I didn't owe them. Right. And now this podcast is not going to be tax advice, because I don't know about you guys, but I never sat for the CPA exam. I actually never made it out of intermediate accounting. I went through the first session. I skimmed through, got a D, and they were like, you want to come back for part 2? And I was like, I do not want to do that. Accounting is not in my wheelhouse. Details, shockingly, is not something that I excel at. So I bowed out of that world. So if it's okay, again, right hands up, everybody. I promise not to give tax advice.
I promise.
Tax advice.
If you accept this as tax advice, it's on you.
Yeah.
You're bad.
Right? Like, that's on you. Like, you should
See
not,
the risk.
yeah, you should not do that. Everything that we're going to share with you is just information that's been shared with us, and we'll guide you through some discussion points to hopefully get you to think through this at a deeper level. So first question of the day is, why is this important? And I feel like this is important because the information being shared with the person, Joe Public, is really bad. And I'm just going to give you 2 examples. I just Googled ways to reduce taxes, right? Top 2 articles on the board. Boom, money. Number 1, contribute to a retirement account. Number 2, open a health saving account. Number 3, check for flexible spending accounts at work. Okay, now I'll move down to the next little icon and click CNBC. What do they say? Enroll in an employee stock purchasing program, which I feel like is interesting, by the way, because you go and read about this. You're like, oh, I didn't know that I could reduce my taxes by purchasing stock if I work for a Fortune 500 company or publicly traded company. No, you can't actually reduce your taxes by buying the stock. But if you hold it to some future date, then you can sell that stock with after-tax dollars for capital gains instead of ordinary income. It's like, that's not new. I don't know about you guys. I didn't realize that was a new idea, but CNBC thought it was the number 1 on the board. Shockingly, number 2, enroll in a 401k, then health savings account, deduct your student loan interest, and then sell those losing stocks that you bought. That's their idea. So here's the information that's being shared right now on the World Wide Web. And I feel like this is super important because people are being taught bad things. Do you guys agree?
I think they're definitely being herded in a direction.
Well, all the top things have nothing to do with paying less in taxes.
Yeah.
It's a postponement. All those things are a postponement of taxes.
Yeah. I mean, I will say this, looking at the list, the only thing that I see on the list that could potentially be smart, right? Like, I never participated in this because, to be honest, I never knew how much money I was going to spend in healthcare issues. I don't know if you actually know how much you're going to ever spend in healthcare issues. I've created a different strategy based upon advice I've been given, but the health savings account, right? Like, that's one that, hey, if you put money in that account and you can use it on qualified expenses, whatever that said expense may be that's qualified, then there's dollars that you're going to spend anyway that you avoided having to pay tax on before you spend them. That could be a strategy, but the problem with that is, what happens if I don't spend those dollars? What happens is if I take great advice and I actually exercise, I maintain my immune system, I do things that potentially could reduce my need for that. Well, how much money should I put in there? So if I'm looking at that, I'm the ultimate optimist. I'm not going to get sick. I'm not going to have issues. I'm going to put very little money in it. So did I really save taxes? Probably not, because I didn't have much in it. What do you say about that, Aaron?
Well, my thing about that is, what's the opportunity cost of setting that aside? What if an opportunity comes along and that's not easily accessible? You're going to take the tax hit and then go take advantage of the opportunity?
Good point. Hey, man, the whole opportunity cost thing always comes back and gets you, doesn't it?
Yeah, to me, it's not about the taxes; it's about the opportunity cost or the lack thereof.
Well, why is this important right now? That's the second question I want to ask you guys, because I know it's important because there's poor information out there. But why are we speaking on this subject matter right now? What do you think?
I think it goes to foundational planning, right? How you see the world today, how you're working and living within it. If you are okay with that, hey, awesome, great, super happy for you. Go ahead and keep on trucking. But if you feel like maybe some of your resource that you're working for, like I took a look at some of the things I did last year, and essentially one of my quote economic activities was basically a flow through for the government. They took everything I made and said, thank you very much. And then walked out. I'm like, wow. So I did all that work last year and they just took it.
Are you at liberty to share with us what that means? What kind of activity was that?
That was some of my independent self-employment things that I did. And essentially at the end of the 12 months, I looked at everything that I made, and pretty much the government took it all because of the other activities that I had going on as well as that one. So this always seems like a really dry topic. Oh, wow. Tax planning, tax strategy. Oh, my goodness. But if you think about it, an airplane that takes off in LA and is flying to New York City, a very small course correction at the start of their flight, maybe a 1 degree heading change. As time marches on, the divergence of that flight path gets bigger and bigger and bigger. And it was a very small shift in what that flight did at the very beginning. But by the end of the flight, they're landing in Boston as opposed to New York City. So what initially seems like a very small thing, but if we can make these very small pivots today, maybe some proper, getting in touch with people that are qualified in this arena, having them look at what's happening in your world. Hey, is there a separate structure I could be setting up for maybe my businesses? Did I set them? And I'll full disclosure for everybody on the call right now. I set my businesses up the wrong way. I am totally happy to admit that, so that hopefully you guys don't have to make a 6-figure mistake like I just did.
Well, I want to come back to that if it's okay, because I would love to know what you thought was the wrong way and potentially get what advice you were given after the fact to say this is how it could have been done better. You willing to do that in a second?
Sure.
Okay, Ernie, why is this topic important now?
Well, the topic is I have an active income problem. Do you want to have that problem in 5 more years? You want to have that problem in 10 more years? What are we doing about that today? And can the pain point of taxation motivate us to be moving forward? So I think, yes, taxes is pain today. Mark, I want to join the seat with you. Man, when I have to get out the checkbook and write something to the treasury, oh man, I don't like that. And I had to do that a few times. We're wrapping up tax season now. It's tough. So I'm with you there. It's motivation. I want to keep growing forward to get myself in a position where if I'm flying from LA to New York and there's just a little bit of a headwind, that is exhausting. How can I reduce that headwind as much as possible to make the trip that much more enjoyable, that much more efficient? And it's ultimately, I think this is motivation to create a lifestyle where your income isn't active. That's why I think this is important.
Well, it's interesting you guys talking about writing those checks. I hesitated writing that check so much that I didn't even want to write my name on it. Here's what I meant. I was leaving last Friday to go play golf with our brother Joey, right? And I knew I had to drop off a check at my accountant's office so they could get it certified, stamped on April 15th. And I gave my wife, I said, would you do me a humongous favor? Would you drive this to the accountant's office for me and drop it off? And she did. Love her. Thank you for jumping in there and helping out. The problem is I get this email back from the accountant about an hour after the fact. Hey, you never signed your check. Like, no. Are you serious? So I didn't even want to write my name on the check. That's how bad I hated it. But I also think another issue speaking of why is this important right now, is that we're experiencing a different form of taxation, right? Most of us think taxation only comes in the form of income taxes, but there's also a taxation coming from inflation, right? The price of goods have gotten more expensive because not Ukraine, right? That's where we want to blame it. Oh, inflation is on this whole war happening with Russia invading Ukraine. No. Inflation, the definition of inflation is the increase in money supply. Well, when did our government start increasing the money supply? 1970.
Early 80s, a long time ago.
They've been jacking up the money supply heavily over the last 10 to 12 years. So inflation, what we're experiencing, is really a result of what they've been trying to keep covered underneath things for the last 10 to 12 years, and now it's rearing its head. So I think it's important that we've got to find ways to offset that additional tax, right? That I don't think we can. I mean, that's hard, right? We can't tell the people that we're doing business with to reduce the cost of goods, right? Like we're subject to what they're telling us the prices are in most situations, but we might be able to offset how we pay taxes in ways to reduce it. So I feel like there's several different things we can cover today. A big point I want to get you guys' opinion on, we've talked about this before, but not everybody has heard about the 4 ways that people actually pay taxes, right? So there's 4 ways people pay taxes, and I want to kind of break those down. And then I want to talk about, are there ways, legal ways, that the 3 of us or others that we know of have been given advice by qualified tax professionals, and we've seen them be able to reduce their taxes accordingly. Okay, if we can accomplish those 2 big points, maybe we can get in some other stuff. But I love to have 3 points usually, but I think those are 2 big meaty topics. And given the fact that I don't have any governors with JD and Joey here today, who knows how long I'll talk on these subject matters. So keep me in check. So there's 4 ways people pay taxes. Mark, what's the first way that people pay taxes? What quadrant did they pay them from? Employees, right? What typically, what's the highest rate the typical employee would pay taxes at?
Oh, I don't know, but painful would be the rate.
It's roughly 40%, right? Like, again, depending on different state tax and other things can be higher, but if it's okay, we'll round and say 40%. What's the second way, Ern, that people can pay taxes?
It says a self-employed person.
Self-employed person, right? At what rate does a self-employed person typically pay taxes if they're in the highest bracket?
Well, it can look very similar to the employee.
And even more so, because with self-employment taxes, they actually can end up paying closer to 60%. So you got an employee, right? We graduate from college, we go get a great job. We do really well. We run up the corporate ladder. Congratulations. You not only get to work 40 to 60 hours a week, but in addition to that, you end up paying 40% of that income off to the government. Now, if you're really smart, you go out and you learn how to become a business owner. You specialize. You move down at that quadrant you were talking about, Ern. You become a self-employed. Maybe that's a doctor, attorney, sales professional, whatever it may be, and you excel at that. Congratulations, with self-employment taxes and everything else, now you're paying close to 60%. Sounds good, right? Make more money, pay more money.
Well, you mentioned that 40 to 60 hours too. That, congratulations to the employee for winning that, because the self-employed person, you just double that.
Yeah, it's going up. 60 to 80 hours would be norm for an entrepreneur, right? Because that's what people think is, I'm going to move out of the employee quadrant and become an entrepreneur. And that means that now I get to work harder and pay more in taxes for what I make. But the good news is that's not the only 2 ways that we can pay taxes. What's the third way in which someone can pay taxes, Mark?
You can be a business owner.
Right? You can become a bigger entrepreneur, right? You can take that little idea that you had and make it a big idea. At what rate can business owners, do you know what the corporate tax rates are right now, roughly?
No, but I know it's normally a topic of discussion that people get angry about it.
So roughly right now we're at 21%, I think is where C Corps are paying taxes at. So let's just, if it's rounding purposes, we're going to say 20%. Now, there's reasons why, and I'm going to come back to that. Why is it that business owners can operate and make high income and still only have to pay 20% in taxes, which I feel like there's probably some story of you working down in that S quadrant that had you paying a lot, 60%. And somebody probably said there was probably a way you could have done this differently, maybe potentially got you into that B quadrant at a fraction of that. We'll come back. Ern, what's the fourth way in which people can pay taxes?
You can become an investor.
And that may be what we may even consider the true entrepreneur of the group, right? That's a person living off 100% of the investment itself. They're not trading time for money in any shape or form. They're not even using others' time. They are absolutely having investments create income, giving them ultimate geographical and time freedom. And earn some of the most successful people in the world, we said this a second ago, pay how much in taxes as a percentage?
0%.
They can pay as
zero
little
in taxes
as 0%, which is really shocking. It really hacks off people in certain political news stations that that's possible. And the problem is that they've been employees their whole life and they've paid 40%, and they think, why in the world can someone else pay zero? Right. And so I want to kind of break down some of these different things, because when we don't understand why people can reduce their tax liability by being in just one of those different 4 quadrants. And if you haven't read the book, The Cashflow Quadrant by Robert Kiyosaki, great read. One of his advisors, Tom Wheelwright, has written Tax-Free Wealth. He's got a podcast called Wealthability. A lot of the information we're sharing, we've just learned over years of consuming this information, as well as doing lots of our own homework. So this isn't new to us nor original to us, but we'll share some of it. So when you think through ways that people can reduce their tax liability, why is it, Mark, do you think that business owners and or investors are able to pay less in taxes? What are some of those things that give them the ability? There's
an incentive structure. Okay, if you were to take a look at the IRS code, right, the tax code that's out there, since we're doing such a great job of rounding, if we said it was 3,000 pages of total tax code, well, really only like the first 100 pages, the very, very small portion of the tax code is actually designed to talk about how and what you must pay taxes on. The rest of the tax code is designed as an incentive type structure. And this is how some people view it. An incentive structure for the government to incentivize people to go out and do things that the government doesn't want to do and frankly probably shouldn't be doing. So there's a lot of things in there like creating housing, oil and gas, green, clean energy. There's a lot of things that need to be done for our society to survive and thrive. And the government can't do it all. And so what they do is they provide an incentive structure for individuals, entrepreneurs, to go out and do those things. And for that benefit to society, they are given a, quote, tax break on certain items.
I just read this comment. It was so drawing joy. I wanted to share it. I realized that my time is not really mine. It's my company's. Now I have to stop negotiating my time for money, and I need to start working to become financially free.
That's exactly how I felt when my daughter Adler asked me on the way to school, Dad, can you pick me up from school today? And I had to say, no, baby, I have to go to work. That's where I drew the line. In order for you to be clear on the things you need to do and stop doing, and to know who you need to become so that you can stop trading time for money, join us right now at wealthwithoutwallstreet.com/passport. Now let's get back to this episode.
I want to go back and, scratch on the wound that you had earlier. You kind of brought it up, and I mean, just in true Wealth Without Wall Street fashion, like we are an open book. We share almost everything, at least Joey and I do. And sometimes we put you guys on the spot to share yours. What was it that you did, you said, that forced you to pay a lot more in taxes? And then I want to hear about what you thought or were told that you could have done differently.
So all of my business entities, all of my structures, all of my wealth flowing is all a flow through onto me, or was, I should say, was. And so because it all flowed up to me, that all ranked on my ledger as, quote, ordinary income, which is the pinnacle of the whipping boy for the tax collector. And so because I just got destroyed, I mean, I made some moves last year, right? Because we were able to take advantage of some tax laws like the CARES Act, the HR 133, so there were some moving pieces. I left my W-2, I'm now doing a lot more self-employed type stuff. A lot of those dollars moved in a different way, and I just got destroyed. And so when I broke down and had my epiphany moment of, wait a minute, you want me to write a check for how much? Well, number one, thankful that I got to use it throughout the entire year. So I was very happy about that, but very disappointed that I was paying that much because I felt like something was wrong. And so when I actually went and spoke to Tom Wheelwright's group at Wealthability, and they said, "Oh yeah, this is not good. You're doing this all as earned income." Well, thank goodness you got rid of your W-2 and you have these other things, because now we can structure those to legally protect what's happening in your world. And really all it is, it's very small adjustments. I'm not having to go out and like completely change my diet, right? It's not like I'm going on like a super alternative diet. No, we're just changing how the menu is served up.
So you're not going like keto, gluten-free on this thing. All you're doing is just switching the order in which you're intaking the food.
Exactly. So it's super exciting. And here's the deal, gang, is no different than what we do on a day-to-day basis with the people we speak to, right? You can go out, you can read all this, you can figure it out on your own. You can read the books, you can figure out S Corps, C Corps, LLC structures and all these kind of things. You can become a CPA, a tax attorney. You can do all that, or you can leverage someone else's knowledge and expertise, because I surely don't want to read and understand all that stuff. So I'll tell you what I want to do, and then you help me figure it out.
I'm going to ask the two of you guys a question. I'm interested in your feedback here. A lot of the times when ideas are shared about ways to reduce taxes, what do you think one of the biggest fears that people have of taking action on something like that is?
I think ultimately they're most afraid of the IRS.
In what shape or form?
In making a mistake that keeps them from even engaging their brain that would say, what sort of things are in the tax code that I could make use of? I'm not even going to engage those things because I'm so afraid that the IRS is going to take a look and want to audit my stuff.
Exactly. The word audit, right? I don't know how many times I've heard that fear brought up in groups that I was a part of, listening to tax professionals, listening to some of these strategists that have shared. And I was amongst a lot of S quadrant people who are highly specialized, highly educated, right? But also highly fearful of an audit. And I once heard it said, I think it was Tom Wheelwright actually that mentioned this, that the people on the right side of that quadrant, the business owners and the investors, actually welcome audits. They expect an audit. They even consider an audit like a financial checkup.
Well, not only that, they would hire internal teams of people to work, or companies to come and help do audits for them.
Yes. They're considering that as a way to help them assess the things that they're doing, right? And if you think about that, like if you do this from a health perspective, you go and get physicals on a regular basis. If you're taking, my wife and I just got finished doing labs. We have lab works done like every 4 to 5 months, just to test different things at a cellular level to see if the adjustments, some of the dietary, some of the health things we're doing are making improvements, right? Well, now I don't like going there and letting them draw blood, right? That's not a great, I don't put that in the top 10 of my day. But what is it allowing me to do? It's giving me information. And that's the way an audit is, right? It's nobody is super excited, just like drawing blood. Nobody wants to have the audit. But at the same time, they're doing it because it is a checkup. It's allowing them to improve their processes. And the thing is that people on the left side of the equation, how active are they managing their financial situation? How, are they really having the best financials available, the best balance sheets available? Are they documenting every part of their process in a way that if somebody were to ask for it, that they could readily turn it over? Yes or no?
Absolutely not. I mean,
no.
I struggle. I'm a fairly organized person and I struggle. And I look at the other side, business owners, investors, they have teams of people to help.
Exactly. They've built processes and systems that are doing that, which is why they don't fear being audited. And I think that if you're having any discussions or thoughts about this process and you're saying, well, I'm fearful of, consider then, where are you taking this information from? Are you a left quadrant, left side of the equation person, or E or S, or are you on the right side, right? And I think some of the differences we see on the right side is that they are taking those steps, Mark, that you started to implement yourself, to find out ways to take income and not put it onto your balance sheet. I'm assuming in the form of like a K1, for instance, but having the ability to let businesses that get business deductions write off some of those expenses. So that way there's expenses you already have that you don't have to pay in after-tax income. Going back to the first statement we said, right? The health savings account, I mentioned that as, well, maybe that's possibly a good idea, right? Because now we're taking a dollar we're going to spend anyway. And instead of having to spend it with after-tax dollars, we can spend it before tax. Well, there's things that business owners can do legally that allow them to write off before taxes things that they were going to spend money on all the time. My family has meals constantly that are before tax write-offs. Why? Because there's specific provisions given to us to allow us to do that. There's ability, like we're going to have team meetings, right? We have them several times a month. Well, the government allows me to write off portions of my house payment because of some different rules that govern dwelling unit rentals. There's all sort of values.
So on that topic, Russ, how did you find out about that? Did you read about that on your own? Did you go research tax strategies, ideas, ways to reduce and get creative?
I'm sure it was the next point on that CNBC article, Russ, that you looked up.
Yeah, I only got through the top 6. I'm sure it was down there. It's
sure it was
number 9 or 10 on the list, right? Ways to do that. The answer is no, but sort of, right? Like, to your point. Go ahead.
Right. So if, again, you can go out and try and figure all this out on your own, or you can take a fast pass and you can skip to the head of the line and enlist a team to help you. Okay. And so really you think about it, if you're worried about an audit, well, a lot of these people aren't worried about audits because they've enlisted a team, and the team has gone and set up a plan, an implementation structure, follow through, and support. And they're going to be the ones that are battling on your behalf. And really they did the work, right? So they've got all the documents. They know how the things went through. As long as you bring the information to them, it's going to be okay. And so I go back to the idea of, well, if you're really worried about an audit and you're like, well, I just don't even want to try that because of the risk. Well, think about the risk you endure every day. But how do you get through it? You mitigate it, all right? If you want to travel, if you're like me, it's wintertime, it's snowing, it's freezing, you want to go somewhere warm, but it's snowing and it's freezing. And that's kind of risky for the airplane, right? But you're entrusting skilled professionals to properly prepare the airplane, load the airplane, de-ice the plane, take off, get you to destination and do it. I mean, you're not going to go get a pilot's license yourself and then try and challenge that on your own, more than likely. So what I'm getting at here is, don't feel like you've got to do this on your own. Feel free to enlist the services of people who are more knowledgeable and study in that field. And then you can use your time to go somewhere else and create some income that will then allow you to be free.
Well, and this is not a perfect analogy. All of them tend to be flawed, right? But what you just said made me think of something. I was talking to a guy, and he was saying that we own a property and a hunting license in Canada, Saskatchewan. That's a hard word to say for me. And there's nobody up there. Like, I mean, literally nobody. You can go miles and never see anything. But what you'll find in some of that northern area is that you'll see a pocket of like 4 to 6 homes. Ern, what do you think you find in the middle of those 4 to 6 homes? Have you heard this before?
I have not. I have no idea. I've never been to Canada.
A church. There's actually, they will say that for almost all these little areas, you'll see these 4 to 5 pockets of home, and without fail, there'll be a church in the middle of it. Now, to your point, Mark, you started talking about cold and ice and risk, right? Well, for those people who are going to be a part of a church in that part of the country, if they had to drive a mile, much less 5 or 10 miles, 20 miles, like some of us do to go to church in the South or wherever we live, that could be super dangerous in the winter months, right? When there's maybe one hour of daylight, when there's, snow feet deep, right? So what have they done? They brought it into their community. Well, I think that would, just the analogy I'm making here is that sometimes we have kept people like this, tax professionals and people who could help us at an arm's length, have kept them out of our circles, right? Because out of fear of not wanting to have to go through the process of learning or trying to, what is it going to require of me, right? Like some people don't go to the doctor because like, man, I don't really want to know what's really wrong with me. So we keep an arm's length approach as compared to bringing these people into our circle, creating a community. So now there is potentially safety in the fact that there's not far to go whenever we want to engage in whatever that thing is. Does that make sense?
Absolutely. I think one thing, as I was thinking about this topic, and just over the last several years, putting this puzzle together, which is really what it is, a team of people in our own organization, people that are working with us. What this is about is an attitude of growth and education. And as I look at the right side of the Cashflow Quadrant, where those great tax benefits exist, especially for the investor, it's investing in growth. What's the ultimate way to reduce your tax liability is to be growing, not only in your knowledge, not only in your team of professionals around you, but also in your wealth. If you're growing a business, there's expenses. Russ, you mentioned a few. You guys are going to eat. You're going to eat in the business, or you're going to eat in the home. How can you make a way that those things that you're doing can qualify as business deductions? There's those things, but there's also opportunities. And this is what the investor does, is growing wealth, investing in other businesses or in other assets that create inherent tax benefits in of themselves. And so just example, we look at, I feel like the news is full of Elon Musk and Will Smith right now. It's like, and Johnny Depp. I have no idea what's going on there, but that's just the things that I see. Elon Musk is the one that I'm, sort of interested in. That's what he's done. He's sold a bunch of stock options. He's positioned himself in a place of liquidity. Now he's making a move in Twitter. And I don't know any of the details. That's just what I see. I see an investor at work, and people are hating the fact of how little taxes he pays, but he's just playing the game. He's growing his wealth, and he's existing on the right side of that quadrant. He's in a position of growth.
Well, you see that the government has incentivized people who will create jobs, people who will create housing, people who will help protect or conserve the climate, right? And we see people who are, investing in things that capture carbon, for instance, and are able to do creative things with that give the ability for them to write off large amounts of their ordinary income tax. We see people who are willing to conserve land and prevent it from ever being built on again. And governments are saying, sure, we'll give you large amounts of credits to write off against your ordinary income. We see all of these different areas in which people are finding, investors are finding ways to use what the government says we want to reward. The government says, hey, you want to go buy an apartment complex and, house a bunch of people? You know what? We'll let you borrow the money from a bank and let you write off all of that and depreciate all of the property to a point where most likely you will pay zero in tax for the next several years if you do it correctly. There's all of these incentives that investors are finding inside of that last grouping of 2,900 pages or whatever it is, to your point earlier, Mark. We need to see, how are we operating? Are we operating only on the left side in fear of the unknown, or are we engaging and growing our network and bringing people into our community who might be able to give us feedback and information that could help us keep this? Because what could we do? There's the question. What could we do if we had more money? Mark, final thoughts.
Final thought on this one is, I want to challenge your thought right now, because more than likely you might be in the camp of, well, you know what? I can't afford to go pay for someone to help me set this up. I can't afford a tax prep person. I can't afford this or that. Well, actually, did you know? Two thoughts here for you. Number one is, it's not how much somebody costs, it's how much they can save you. All right. So whether it's your tax prepper or your tax planning, I'm not worried about the cost, because I know if they can't validate the cost with an equal or greater savings, then it doesn't work. But did you also know that in that book of IRS code, that tax service that I'm getting ready to go through and do all that with, that's a business expense? That is a deductible item. So already you can go in with your first deduction if you don't have any. So think about it that way, and get out there, seek out people that are way more knowledgeable and can help you make the moves now, so that you don't have to go through, being on the whipping pole like I was this year.
Sometimes he feels like he's been tied to the whipping post. I get it. For me, this just tax codes, they change, right? No doubt that it will look different in 15 years. There will be technologies out, needs, incentives will be created. Are you becoming the type of person who can thrive in that environment over the next 30 years? Are you so dialed in on taxes today that you're missing the opportunity to be educated, to build a team, live in relationship, so that you can continue to thrive in an ever-changing environment? Because in the change is opportunity, right? If we know what's going on, we'll know what to do. Nelson Nash made that. This just is a constant Nelsonism, and I think that's the point. So my takeaway is: are we becoming the type of person who can mitigate taxes today, but also thrive in that environment going forward?
The thought process or question oftentimes is, how do you consider investing? What macro items are you looking at to help guide your decisions? Well, I think the same thing can be true with taxes, to your point, Ern, is that let's look at the macro. Let's look at what the government is most interested in, and let's find out how we can get involved in things that is going with the grain, right? Getting a tailwind from our airplane across the country instead of having to fly into a headwind, right? Let's don't fight them. Let's find ways that they are saying, we're behind you, right? Like, they don't have to be an enemy. Unfortunately, too often times we have seen them as the enemy as it relates to taxes. And mostly then that leads people to making bad decisions. That leads people to making cheating, if you will, on their taxes. The people I know who pay very little in taxes, if zero, are not cheating. They're playing the game according to the rules given and are willing to adjust if the rules change. And I think that that's important. As always, we share these ideas to get you thinking, to help, maybe give you an idea that you haven't thought about, maybe challenge you as Mark did in here to say, maybe you too need to find tax professionals. You too need to be a part of a group who's learning ways to not only reduce their taxes, but also to increase their passive income and also build infrastructure. And if you're not already a member, we have a group. We actually have 2 groups, depending on if you're a accredited investor or not, that you can participate in that do those very things. If you want to jump on with a call with one of these coaches, you can take 15 minutes and you can share a little bit about your situation. They can tell you if there's a fit for you here within the Wealth Without Wall Street community. You can go to wealthwithoutwallstreet.com/free call and do that. As always, we appreciate you listening. Please like, share, review this podcast so others can find it. And as always, have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.